Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Dennis Dick with you here, and again, just like yesterday, a lot of stuff to get to on our show. A lot of news and a lot of movers and a lot of headlines to discuss. So we'll try to cover all of the following. We will try to cover earnings from KB Homes and Best Buy. We have holiday sales this morning from Target, Kohl's, L Brands, and Costco. Some big rating changes to Twitter and Yelp. Ford is closing some plants. Boeing had some good news. We're going to talk about Constellation Brands and Canopy Growth rallying after the bell. Thank you very much, Mad Money, for that. And our guest today, Marc Chaikin, will join us at 8:15. Dennis, how was your overnight session?
You're fast on the trigger. I was trading over here. I wasn't on that
sorry
computer. I was
about
like, unmute, and I couldn't hit it. So I knew I was muted. I just couldn't find it. I was like, I got to find it faster there. So
we're in a fast market.
The overnight session was very interesting. I tell you, nothing was moving stocks more than Mad Money last night. That's got to be the most influential Mad Money I've ever seen. And it was because they were dropping bombs on there. I mean, well, not even good bombs. That STZ, so they had they had the CGC, STZ, both CEOs on. They had them together a little bit too. And Constellation Brands guy was just talking up his stock, and he was talking in a major way. The stock was trading up a couple bucks because it had an upgrade from Guggenheim earlier, and it was on Mad Money, and they were talking up a little bit there prior to it. So it had kind of drifted up. But then he comes on and says he just bought 1 million shares. And as soon as he says that he just bought 1 million shares, and he says, and he clarifies, he's like, I'm not talking $1 million. I'm talking 1 million shares that him and his brother just bought of Constellation Brands. The stock went from 153 to 155 in a heartbeat. It was just taking off on that. So that's your catalyst here this morning, was the Mad Money interview, just taking off. And yeah, you know, it's one thing, obviously, you put your money where your mouth is. Another thing to put that kind of money where your mouth is. That being said, interesting, you know, when you always the devil's in the details, right? So he acted, it really sounded like he just went in the open market and bought 1 million shares. And that was not the case, because props to one of my Twitter followers here, and I'm just going to go grab him here, Alex Lainstein. He tweeted at me and showed that this was actually not in the open market. This was through options. So in the purchase back on January 3rd. So yes, but it looks like an exercise of a bunch of options in there. So it wasn't like you went to the open market, but it sure sounded, he sure made it sound like I went out there today and just bought 1 million shares because I really believe in this company. It was actually before the fall, so it was back on January the 3rd, and it was exercise of options that got on those shares. So devil's always in the details a little bit. It wasn't as, you know, as big of a statement as he kind of let on. So I was a little bit, you know, kind of dirty what he did in my opinion there. But
was that mentioned on the show, or how did?
No, it was totally like he made it sound like went to the open market and bought 1 million shares. So, but the Twitter follower, because it's so where did he get that information? So if you look at my Twitter account there, they come out and there's ways to find the stuff out, obviously in disclosures when you're buying that kind of shares. So he went and, you know, obviously, and I don't know where he dug it up from, but there's different places you can get it from. Bloomberg. You can get it from, you know, different places online. But it just shows the exercise of the options back on January the 3rd at $11.85. So he made it sound like he went in the open market, and he didn't. So I just wanted to clarify that a little bit further for whoever obviously was trading off of that. But that being said, still exposure to 1 million shares here. So is somewhat putting the money where the mouth is, just kind of not in the way he kind of insinuated it. And he didn't say that. He didn't say he went to the open market, but it's just the way the interview went. You kind of felt like, whoa, he kind of made it sound like that's what he did, but he didn't. So anyways, still exercise of options, still exposure, still putting his money where his mouth is, him and his brother. So stock up 4 points, mostly on that. Goldman upgraded here this morning too. So ST Zebra getting a bounce at 150 remains huge here now. I'm interested in this. I mean, we talked about it. I'm somewhat interested. I mean, if he would have just went in the open market and bought 1 million shares, I would have been way more interested. Now I see it was exercise of options. It's not as bullish as it sounded on Mad Money, but in any regard here, stock is getting a nice lift.
And CGC here too.
Yeah, going over, CGC was on Mad Money as well, and it went off. So CGC had a huge day yesterday. That was the upgrade from Piper. But not only that, all the pot stocks were kind of taking off there yesterday. But incredible pop here, after hours as well. Popped another $2 because STZ, again, Constellation Brands CEO, saying he sees CGC as $1 billion business. So really talking up both the stocks last night. And that's, it popped on that too. So it was up 2 points last night. Market effects has given back $1 here. CGC has been off to the races. I'll just say, if you are looking at resistance points, 35 was huge back in November, December. Obviously, we traded over that last night. We're trading back under right now. I'd keep my eye on that level. It's a big move. If you're coming in here to CGC now, you're late to the party. This thing was $25 a week and a half ago. It's now 35. You're talking about a stock that just went up 40% here in 10 trading sessions. So a little late to the party if you're buying it now, in my opinion, which is, about the same with all the stocks because they've all rallied so significantly here. But you can't argue, with the CEO talking. They're talking, and that's what helped it last night. So Mad Money. Whether you love it or hate it, it was moving stocks last night.
Well, would you say you're that late to the party if you buy it today? Because we know how high it can go. We know it can get to $55, $60.
Well, it did before. Should it have been there? That's the question too. It's still a valuation issue. I just don't like chasing stocks, Spencer. And I still don't think we're out of the woods. Maybe we are. Maybe I've been wrong. But I was right on calling the calling the 1,000 point rally. I just thought it would fizzle out by now, and it hasn't. So again, we're still below 260 on the SPY though. So we haven't taken out the 260. Joel talked about that level before he left. I've talked about that. Carter Worth has talked about that level on CNBC Fast Money, who I think is one of the best technicians out there. And I totally agree. 260 is huge. So we haven't taken that out. We kind of are struggling a little bit the last couple of days. I know, we're holding on, but we're not in full rally mode here anymore. And there's a few stocks that are leaking. So I just think, you're at a resistance point. You've had a hell of a rally. I don't like buying stocks when they've rallied 40% in 10 days. I've been trading 20 years. I haven't made a lot of money buying a stock up 40% when it's rallied that in 10 days. So I would wait for a pullback on CGC personally if you wanted to get in it. Maybe you don't get it and then you just miss it and you move on to the next trade. But I don't want to be, all of a sudden buying, the top here on the recent rally.
Speaking of just missing a trade that happened to you yesterday, I believe, was it Verizon or AT&T?
Oh, yeah, because I say on the show, and I spelled it out. So AT&T and Verizon both went ex-dividend yesterday. And I had AT&T long, and I had Verizon long overnight. I often take them overnight. I sell them the next morning. I sold Verizon up around like 57.90 the next morning. So I get the dividend plus a little bit extra. And then actually you lose a little bit because, but anyways, I make money on the overall trade. And then AT&T, I took overnight too. And same thing, I sold it, I think 30.90-ish in the pre-market. And then I had a little bit left at the open. I was selling that on the open. And I was trying to sell it short on the open too. Both these, I was trying to sell Verizon and AT&T short on the open. I got the Verizon, but the AT&T was indicated open like 30.90. And ended up opening like 30.80. It quickly, some sellers must have came in at the last few seconds, and I missed the short. So I got out of my long, but I missed the short. So I was kind of kicking myself. Then you get so many positions. It's not like I got 1 or 2 positions. I got like 25, 30 positions. So I don't get back to it in time. And, I see the Verizon. I made some pretty good money on the Verizon, but I missed the AT&T short. Hopefully some other people got it. Actually, I guess it ended up open at 30.88. So I just missed it by a couple of cents. But because I think I had my order marked at 30.80. I think I actually had it marked at 30.89 to get short. So just missed it. But, that happens sometimes if you can get back to, if you're only trading 1 or 2 stocks, you can just all of a sudden, I'll just hit the bid now. But when you've got, like right now, I've currently got 30 positions on, I've got to get out of those at the open. So there's a lot going on in my first minute of trading. So typically I'm not going to get, a turnaround notice it even until it's probably too late. But AT&T went straight down. Verizon went straight down. Ex-dividend. Those are just textbook trades. Worked perfectly yesterday. Congratulations to one of my Twitter followers there. I'll just give him a shout out here because he said he made good money shorting the AT&T open. And that was Alex, a big guy tweeter on Twitter. He said, your T play worked like a charm. Thank you. And it did. It worked perfectly. I obviously didn't get to participate in the short side on that one. Did get to participate on Verizon. Both of them went straight down after the open.
But key lesson there, key takeaway for AT&T is you didn't get it. You moved on. That's life.
Yeah, well, and I had the long, and obviously you can't get them all. Sometimes you make good calls. Sometimes, you know, I mean, I can't do every, and sometimes you just forget. You know, you're on the show, somebody asks me about a stock. Oh, I like it or I don't like it. I don't go back to it. If it's a real setup, sometimes I write it down there, and then I'm like, yeah, I should do that one because I like that setup too. I mean, I get great ideas from all the traders on the show, and great ideas on all the traders in the chat. So, you know, when somebody says something, I look at the chart, I was like, oh, I like that setup too. Then I write it down on my little piece of paper here, and I try to execute it. Sometimes you get it, sometimes you don't. You know, I might just miss by a few cents. Maybe I miss by a lot. Maybe it just doesn't come to my price. But you've got to move on. There's always another trade. So you're not going to get them all, and sometimes you are going to get them. But, you know, like last night, I was going to take CGC long home, and I took Constellation Brands long home because they were going to be on Mad Money. So I like the Constellation setup. So I was actually long. I bought the close on Constellation Brands of 150.94, and then I had a Guggenheim upgrade, and it started rallying on it. It started rallying like 50, 60 cents, and I was like, you know what? That's pretty good because it's coming on Mad Money. And then the Fast Money showed a clip, and it almost looked like it wasn't that good of a clip on what was going to be on Mad Money. I was like, oh, I don't know. So anyways, I take the profits, and obviously took the profits way too soon. I did sell some of my stock up in the 152 handle. That's as good as I did, and obviously it's 154.60. So I should have held the stock through the whole entire interview. But typically when you get Mad Money, you might get, you know, 50 cents on something. You know, you don't usually see a $4 pop. But, you know, it's not on every Mad Money show that somebody says they bought 1 million shares. So there was no way to call it. They were going to say something like that.
All right, 3 minutes before we're going to go to our guest today. So in that time, let's do
retailers. Let's go to
Okay.
retailers.
Well, before we got a lot of them, I don't know if we're going to get to all
Let's
of them.
go to some of these same store sales ones because
yeah,
holy cow.
So
what's going on with Macy's?
Well, yeah, theirs came out right as the show was starting here. So
this is incredible. This is an incredible fall in Macy's. And here's another one I'm kicking. I was short Macy's overnight. I covered it on the Kohl's number in the lower 31s. I did not, you know, obviously you don't know. I mean, you don't know what the numbers are going to be. I covered it like, you know, half an hour ago. And
so typically
they down $5, I guess I left a little bit of money on the table.
So this is something that we should have mentioned on yesterday's show, but typically retailers will give their quarterly comps, or in this case, the holiday sales comps on the first Thursday of the month. Because the month started on a Wednesday this year, in January. It is this week now, second Thursday of the month. So they'll give their holiday sales, and they're going to give guidance with that. In Macy's case, their holiday sales were up 0.7%. That's bad. On top of that, they cut their fiscal year same-store sales guidance. So they cut it by about 0.5% there. So that's the reason for that Macy's drop that you're seeing.
This looks like a retail massacre day, because we'll just fly through them. We only got 2 minutes here, and then we'll get Marc Chaikin's take. We'll take him right in, and we'll talk to retailers continuing here too. But you got Macy's down significantly. Kohl's was the one that first kick-started it with their disappointing numbers. Spencer, quickly give us the Kohl's numbers, because they're down 7% as well.
Yeah, Kohl's actually raised their guidance, but their holiday sales were pretty bad. Their holiday sales were up 1.2% on a year-over-year basis. The previous year, they were up about 7% on a year-over-year basis. So a big year-over-year decline in the comps. So despite, you may see a headline here that they're raising guidance, they are raising their guidance for the EPS for the year, but the holiday sales comps were terrible, which is why that Kohl's is falling the way it is. But so we had Kohl's, we had Macy's,
L Brands,
we had L Brands, and we had
they're no good
Costco.
either.
Yeah,
down 8% here this morning. We had
Costco.
Target numbers, which looked okay, and now they're crushing it too. Yeah. This is a retail massacre day. Guys, I don't know, man. We've had such a rally here in the markets. Now you're getting, you know, another sniff that, hey, these retailers stunk it up, it looks like, over the Christmas quarter. And here, you know, the market's rallied half of its losses back from December in the first 2 weeks, or first week of January. This is set up to this is just set up well to short this market, in my opinion. You know, whether it's going to, you know, work here, obviously, you know, the shorts haven't been working the last couple of days, but man, if you were, you know, in a lot of these things, and look at the rally that Kohl's had, going from $59 up to $70 yesterday, and it goes right to that resistance point. Not saying, you know, obviously news is news and technicals take a backseat when you have fundamental news, but look at the chart, you know, fails right at the old, so KSS, I'm looking at, you know, the October, November, December. You see all those lows at 70. gets right back up there, and we absolutely fail there now. This is a technical, just classic technical setup here, where, okay, well, it's back to old support. That becomes new resistance. If you sold it short yesterday, you're immediately rewarded here with the good news. Well, good news for shorts this morning.
All right, so let's talk about this with our guest today, who I'm going to call on the fly right now. Marc Chaikin, the founder of Chaikin Analytics, been on the street for over 40 years. He's been everything from a trader to a broker, an analyst. He's done options. He's done.
Good morning.
Good morning, Marc. You are live. How's it going this morning?
It's going very well.
We are talking about this little bit, what appears to be a bit of a retail wreck here between holiday sales from Kohl's and Target and Macy's and Costco and L Brands. Give us your take here on these numbers coming out here. They appear to be bad by looking at the charts.
Well, the stocks are certainly telling you that with Target and Kohl's. I think this is a big surprise for the market because the retail sales numbers look like they were going to be up 5% with online sales leading the way, but we also had a really powerful indication that we had a good Christmas, and things are not looking that way right now. So that's probably going to trigger the pullback that we were expecting anyway after the two big volume thrust days. So I think it was going to require something to stimulate it, and it looks like this is it.
I mean, Marc, you look at the charts here, and let's just move away from the retailers for a second. You know, something I think you talked about, I've talked about, a lot of people talked about. The S&P, this is like textbook, you know, classic bounce back up to where old support becomes new resistance. We're approaching, you know, if I look at the SPY chart, we're approaching the 260 support level that we tested in October, tested in early December, and then took it out in mid-December. Old support becomes new resistance. I mean, I look at this and I think a 50% retracement even. You know, you go 280 down to the lows of 233, take that, what's that, 45 points. You rally about 22 and a half. It brings you right to 258, right where right where we're stalling out a little bit here right now. This looks like if you were long, this looks like your opportunity to get the hell out. And if you look like you wanted to short it before, you're getting an opportunity here now. I don't know. The setup here looks to me like it's not a bad setup from the short side, but you know, the market's somewhat resilient here this morning with some really bad retailer numbers, but we're still down. What are your thoughts here?
Well, you pretty much summed it up in terms of how I'm looking at it. We had that almost bear market, 19.9% drop. And then we had two big volume up thrusts. This is what Marty Zweig used to call the up volume breadth thrust. What's interesting to me is that suddenly everybody's become an expert on that. I don't think I've heard that pattern talked about twice in the last 10 years.
Yeah, maybe it's too obvious.
Everybody's an expert. Yeah, well, that's the problem with all the patterns, but because everybody's got the databases and they're mining them, whether it's seasonal or presidential cycle or something like the volume thrust. And we're in an era where the machines are driving a lot of the volume. So it's hard to know if it's going to work, although it normally does. But bottom line, was looking for the market to top out here, be choppy for a week or two. But I think this is very constructive, and I believe the bottom is in. Now, the people who are on the show today have to realize that we don't have to go back down to 2350 or break it to have a successful test and form a W bottom. We could go down to 2430, 2450 and stop there, where we stopped just about a week and a half ago. Bottom line is the technicals are improving. Number of stocks making new lows is not going to go down to that 48% extreme level that we saw at the lows in December. And I think shorting here is okay if you're basically a swing trader looking at a 5 to 7 day time horizon. Getting out of stocks that you don't like, that have been sort of dragging down your portfolio, makes an awful lot of sense. But I'd be looking for buying opportunities on the dip that's coming.
So you think the low is in. So, despite, us obviously, we're still being significantly low from where we started December. You think that, 1,000-point up day that we had in the Dow, that was, the turning point?
I do. And you've had a 10% rally off a decline just within 10 days. That's extremely unusual. And again, the number of instances is very small, but not that small. 10% rally normally means 6 to 12 months. You're a lot higher. It's the short term that's choppy, and if the retail numbers stimulate a little bit of profit taking, all to the good.
So would you be waiting for a pullback then to really start initiating longs, or would you say, okay, I think if you're long term, let's put your long term investor hat on. So we kind of talked swing trading a little bit there, and yeah, you know, short term, like you said, 7 to 10 days, maybe we're due for a pullback. Put your long-term investing hat on. And, you know, I'm a long-term investor, and I'm a little overweight cash right now and looking to put some of that to work. Should I be starting to nibble here again, or should I wait, you know, a week or two and wait for that pullback? What are your thoughts here? What if I miss it?
Very definitely wait for the pullback. You'll know you missed it if they close above 2,600. You've identified the right level. It might be 2,600, 2,620. Give it a little wiggle room. But I do think you buy only on pullbacks, and you look for stocks, as we've stressed for a couple of months now, that led the market to new highs in September that have also done well here. So a favorite of mine is Salesforce.com. The initial low was around 113. You rallied up to 145 in late December. You pulled back to 120. You've now rallied again to 146. So you made a slightly higher high. Very bullish pattern. If Salesforce pulls back from 146 to 135, I want to be a buyer.
So, Mark, give us some stocks here that the Power Gauge has found here. Maybe on the long side and the short side, that could be good plays.
Well, the interesting thing is that the normal Chaikin classic bull pattern requires that the Power Gauge be bullish. There just aren't that many bullish Power Gauge stocks in any of the market class categories, whether it's large, small, or mid, because most stocks are under their long-term trend lines. So we sort of the computer moves those stocks to neutral plus. So we're looking at neutral plus stocks where the underlying fundamentals are bullish, but the stocks are still in a downtrend. As it happens, Salesforce moves above that long-term trend. But looking in the biotech space, because there's been a lot of M&A activity, I like Biogen. The Power Gauge is bullish. Looking at things like Archer Daniels, Akamai, some of the healthcare stocks that have held up better than others. There are a lot of names that have potential here. Also think with crude oil above $50 a barrel that you've got to start taking a look at some of the refiners like Marathon, which really have great fundamentals, but were knocked down with the price of crude. On the short side, it's the usual suspects. Netflix, in spite of this big rally and recognizing that earnings are due out, I think on the 18th, I think they're due out on the 17th. I think the stock is really at 320 up against long-term resistance. And I think this is a stock you at least want to pare back or sell and see what the earnings bring. We're actually looking at bearish put spreads on that. I think that Apple is a stock you want to avoid, way too controversial, and the Power Gauge rating is bearish. In that space, I like Salesforce, I like Adobe. I think stocks like Visa, where you're really a tech-oriented electronic payments company, very interesting. So it's a broad mix of stocks. What I would avoid are the defensive stocks that people were drawn to in October and November. They took a big hit. Utilities, consumer staples. I don't think you want to be there. If you're forced to buy those stocks to make money, you don't want to be aggressively long the market, in my view. They're a defensive play for people who have to stay invested. If you got money on the sidelines like you do, I don't think you want to be in the defensive stocks. So you've got to be a little bit creative here to find the names that you want to be in. And, I think this pullback is going to separate the men from the boys in that regard.
Completely agree with you on the defensive stocks. I think it's a heads you lose, tails you lose trade, because we saw
Exactly.
in the last couple of weeks before, when we were having the significant sell-off at the end of December, we saw that those defensive plays aren't that defensive. Procter & Gamble, Cokes, all of them started to get hit. Maybe it was Johnson & Johnson that kicked it off with their own bad news, but they started to turn around and selling all the consumer staples too. So if the going really gets tough, they'll hit all those stocks too. And if it turns around and the market starts making new highs, these aren't going to be the stocks that lead the way, because these are more defensive, they're more slow. So maybe they kind of hang on, but they're not going to get you big gainers there either. So I don't like, like a Procter and Gamble, Coca-Cola. I don't really care for any of these stocks just in the next year, just because I think in both scenarios, I think they underperform. So I think
I agree. I think you're looking for high beta stocks here that have good underlying fundamentals. Maybe they've got a unique business model like Salesforce, good management team. Adobe, again, fits into that category. One area that we ought to talk about is healthcare.
Sure.
Morgan Stanley, JP Morgan's having their healthcare conference out in San Francisco. Kramer's been out there covering it like crazy. Someone did a study and found out that the healthcare stocks tend to sell off in the week to 2 weeks after the JP Morgan healthcare conference. They're not acting well. Former favorites like Humana and Centene are underperforming the market, and the institutions seem to be getting out of these stocks. I do think the fundamentals are attractive still, even with a Democratic House of Representatives that could start to put some pressure on pricing at hospitals and drug pricing. But I think you want to start looking at some of these names. If there is weakness following this JP Morgan healthcare conference, there may be some opportunities in the healthcare stocks that really led the way. Humana, Centene, Anthem Health, WellCare, WCG. A number of these stocks are affected by that Texas judge decision on the Affordable Care Act. If the tide looks like it's going away from that decision, either through an appeals process or through the House of Representatives, then some of these names like Centene and WellCare and the stocks that have built up a profitable Medicaid business are going to be attractive. But again, right now you're bottom fishing, so I'd wait a bit. But if you see some weakness there, that's an interesting place to go fishing.
Mark, I have some questions for you in our chat. Somebody asking about where should we go first? Let's start with Visa. Do you like any fintech besides Visa?
Well, again, you've got an interesting business model with Visa. MasterCard is an alternative, but it's sort of apples and oranges. So I think you've got to be in or out, and I think Visa's a better play. The technology is cutting edge, and they're doing more in Europe, and they do a lot with debit cards, which the millennials like. In terms of other fintech, the exchanges are a place that you would always look, especially with volatility up, but I don't see the buying opportunities yet. CBOE might be interesting. This had a bullish rating in October and November. But it's been trading at a trading range, between 90 and let's say 115 for the last 9 months. So that doesn't excite me because I don't see anything that's going to break that out. You want to take a look at the NASDAQ exchange. I don't see anything there. So right now, the only fintech that we've identified is Visa.
What about GNW here, Genworth Financial?
Well, I subscribe to a publication called Investment News, which is the Bible for investment advisors. They were talking about the long-term care fiasco that Genworth has gotten itself into. They're raising rates as much as 100% on existing long-term care contracts. The company's taken like a $6 billion hit. The stock is acting well, but I think it's done what it's going to do. The chart pattern's decent. If it breaks out above 480 and you're a chartist, you've got a head and shoulders and reverse head and shoulders, which counts up to about 660. But with all these problems in long-term care, I don't know where the growth is going to come from. Right now, I call this a mini momentum stock, but not a stock that I feel confident with. It has been outperforming the market. The Fowler Gauge rating is bullish, but I don't know how they're going to come out of this mess with the long-term care that they got themselves into.
One more here, and I'll let you run. Boeing, a lot of positive headlines from that this morning. We have 2 upgrades, or we have an upgrade and initiation of Boeing. Plus, I saw that they had more orders and deliveries last year than Airbus. So let's look at BA.
Well, BA I like because the dollar has rolled over, and although Boeing was booking a lot of business even with a strong dollar, a weaker dollar always helps them vis-a-vis Airbus. The stock needs to break out above 360 to really reestablish an uptrend. The underlying factors in the power gauge rating are bullish. The stock has a decent technical pattern, not great. It's now overbought with negative Chaikin money flow. So if someone was a trader and they bought into Boeing around the 300 level, it actually got down to 293. I think this is a spot to take some money off the table. If you're a long-term investor, just hang on. I think Boeing has a book of business that stretches out to 2025. And, you got to believe in aerospace, whether it's on the commercial side or the defense side. And I think this is your main horse in that race. And if you're going to buy it, you buy it on a pullback below 330. It's closed at 344. So maybe closer to 325, and you've got a good buying opportunity. But the weaker dollar definitely helps.
Marc Chaikin is a 40-year veteran of Wall Street. He is the founder of Chaikin Analytics, which is also the name of his website and his platform, where you can find out about what stocks the power gauge is bullish and bearish on. Marc Chaikin, as always, thanks for the time, and we'll talk to you in a couple of weeks.
My pleasure. We did this all on half a cup of coffee, which is amazing.
Bravo.
Nice.
All right. Have
a great week.
See you, Marc.
Have a good one, Marc. All right. Dennis, what's new on your radar in the past 10 minutes? Anything?
Just market stabilizing, not really moving, but just looking at the retail massacre. And we started talking in a bit with Marc there. I mean, Macy's is down 18% here now today. Al Brands is trading down 666% here. I don't know why that number keeps popping at us. Target's down 4%. I know, I can't get away from it. Costco's trading down. Al Brands, we already talked, yeah. So, I mean, Kohl's, the other one, down 9% here. Nordstrom, they didn't even say anything this morning, I don't think, but they're trading down 8% just because all the other ones are trading down. So they're obviously assuming that their numbers are bad too. It looks like the holiday season was not good.
Something to watch too is we did have Bed Bath & Beyond earnings yesterday, and
they look good,
and they were good, and yet
it's giving it all back. Well, not giving it all back, but this thing was over 15 last night. It's trading now 13.30, so going back 2/3 of the gains here.
Yeah,
probably just because of what else is happening. I mean, yeah, you started last night and you had Bed Bath & Beyond come out and you're like, oh, maybe this is going to be a pretty good retail season here. Anybody who was buying any of the other retailers last night is getting absolutely punished here this morning because every retailer trading significantly down. It's ugly.
Yeah, the Q3 EPS beat by a penny, 18 cents versus 17 cents. Sales was a slight miss, 3.03 versus $3.04 billion, but essentially in line for the Q3 report. They continue to model their fiscal year 18 EPS at around $2. Nothing horrible. They're essentially in line with their numbers there, and yet we're leaking here. I mean, the bad comps from the major retailers are not helping. Did we talk about the Costco holiday sales also, because they were out yesterday after the close? Costco December comps were up 6% on a year-over-year basis, and they're, I guess, holding up a little better here this morning.
I mean, their numbers are fine. Target numbers I thought were fine too, but it doesn't matter when you got Macy's down 18%. They're just finding a reason to sell them all.
Yeah.
So every retailer here is getting hit. I mean, you can look at the XRT. You want to see how bad it is. XRT is down 3% here. And XRT is one of those balance funds that owns like 1% of everything. And like a whole pile of retailers there, once they get overweight, they refix it. But if you look at like the XRT holdings, a lot of them, the ETFs don't do that. But this one tries to stay as balanced as it can, owning about 1.2% of all. Its biggest holding is actually GameStop, 1.26.
Right.
So, it doesn't have a ton of Kohl's, Macy's, but it's got a little piece of them all. So you can see here, trading down 3.18%. That's significant for XRT, and that's significant because you look at this rally that we've had. We get down 38 up to 44. Well, we're giving back a good chunk of that this morning here. Again, all these charts look the same. Where they stalled in the November lows, that's where a lot of these are stalling out here. Kohl's too. classic trade, if you just look, was 70, or we already talked about it, the 70, but Macy's was the same thing too. I mean, Macy's had all kinds of support, 31.50 to 32 until it took out in December. And then boom, all of a sudden we are back. It gets up and kisses 32 yesterday, 31.98, and then boom, we're at 25.87 and through everything. And the chart looks like a complete disaster now. So I don't know. That's what I saw. I'm going to stick with the same thing. Just saying. I know Marc was saying, maybe the pullback's to be bought. I don't know that yet, but I feel like this rally is to be sold, and that's why I've lightened up, and I'm leaning on the short side on everything here. At least leaning, in my opinion, as opposed to buying today. Now we're down $1.50. Maybe get a little sneak back rally here in some stocks here, but I just think it sets up well from the short side, and it may not work. I mean, nothing. If you start like Marc says, you start to get up over 2,600. And then you start thinking, okay, I'm wrong, and you have to have an out. Like any trade, always have yourself an out. Know where you're going to get out of the trade. Have it almost defined before you get in the trade. Because so many people think, oh, I can make this much money, and they don't think about how much money they can lose. I like to define my risk before I enter the trade and say, okay, if I'm going to short the market at 257 SPY, starts going 261, I'm going to admit I'm wrong. So I'm giving it, 4 points or whatever. I give it a little bit. But anyways, that's just, my thoughts here as we're trading this morning.
XRT, you mentioned their largest holding is GameStop. Their largest holdings are GameStop and Party City, Lithium Motors, Five Below. So a lot of stuff. They're pretty diversified across retail, but they are getting hit this morning, as you mentioned, with the rest of this news here. Can you get some opening and balances, Dennis? Do we have any?
Yeah, they're small. I just looked here just a few minutes ago. Bank of America, 100,000, 104,000 to sell. It's somewhat significant. Alibaba, which is a stock I almost feel like ringing the register on. It's 41,000 to sell. It's been such a wicked rally. 5 days goes 130, got up to $153 yesterday. If you're buying it here, so late to the party. And I'm long it. I bought it on the way, down at 144. And I'm looking at it as, this was long term, so I'm trying to forget about it. But at the same time, I think I'm going to get it cheaper. So that's why I've lightened up some of my long-term stuff, because I just think I'm going to get this stuff cheaper. My wife says, make sure you rebuy this stuff though in your long-term portfolio. Don't just get the hell out of it all, time it all right, and then don't get back in. And that's sometimes my problem. The longer-term stuff, I'm so focused short-term, I forget about the long-term stuff. And if I'm raising cash up and I want to eventually get back to fully invest in the market, I just don't feel like now is the time. MO 52,000 to sell. That stands out. We don't talk about Altria a lot on the show. Alibaba 41,000 to sell. Disney 32,000 to sell. Nah, they're pretty small, okay. Spencer. Not influential at all, I would say, at this point in time.
We had KB Home after the bell yesterday. Their Q4 EPS beat by 2 cents, 96 cents versus 94 cent estimates. Sales in line at $1.35 billion. Stock popped. It's giving it back a little bit here this morning, but we are still up. And that's, hey, compared to what we've discussed on the show in the first 35 minutes.
Holding on. The home builders were so oversold. And Lennar showed you that. Lennar had good numbers last night or 2 nights ago, or yesterday morning, I think it was actually. And the stock popped significantly, held on to those gains, most of it. So that was good news. KB Home, same story, is trying to hold on to some of the gains. I mean, the home builders were just really oversold. So it's not surprising that, these things have led the rally back because they were so oversold. That being said, it's been a pretty good rally here now for KB Homes. It was $18 a week and a half ago. That's not even a week ago. It was $18, $18.68. Now you're looking at $22.62. It's up 20% in a week. I'm not buying something up 20% in a week. Not in this. I don't think you're in this full-on raging, like Marc says, 12 to 15% is what you expect in a year. You just got it in a week. So if you're buying it now, you're buying somebody else's profits. Again, I just don't see the setup here to buy anything right now because you're so late to the party, which makes me just think that the setup is better on the short side. I don't know if I want to come in here short. Could it go higher? Sure, it could go $23, $24 in your face. So I'm not saying this is the one setup that I'm coming in. I don't want to short a stock on great earnings and it's still holding up on a tape today that doesn't look that great, but I don't think I'm coming here buying it. So I'd be sitting on my hands on this one.
All right, 8:40 here or about. We got about 20 minutes left in our show.
Ton of other stocks to talk about if you want to go into them. We didn't do the Bed Bath & Beyond numbers, so we might as well do. We just did KB Homes. Let's do Bed Bath & Beyond because it did pop significantly last night. Has given back 2/3 of the gains, but it was an impressive move last night.
Well, yeah, and the numbers I gave, they beat by a penny. They were essentially,
you did give the
they were
numbers.
in line essentially. They were essentially in line for
Good
the,
enough
for the
it was,
Q3.
because stock's been beat up too. Got up to over $15 again. Holy cow! If you're chasing that last night, you're immediately punished because you're down like 15% from where it just was last night. So chasing stocks, not the environment to do it in my opinion, especially on the long side. But it's already 1337 now. You look, okay, it was a decent, they liked it last night. Is it going back all the way and giving it all back? Hard to say. So I think I have no opinion on this one at 1338, although as it gets back towards the 12, you think then it starts to get more interesting. But I don't know, I don't want to buy any retailer when I'm seeing Macy's down 18% today.
Looking at my gainers and losers here, and not a lot to speak of in the way of gainers. We do have Twitter up this morning. They called a big upgrade from, that was Bank America, upgrade Twitter to buy, and they announced a $39 price target on Twitter. And that's like my biggest gainer of the morning, besides Bed Bath & Beyond and DBVT. That's really my biggest gainer of the morning.
Twitter is getting a nice pop here. There's a lot of ratings here again. The analysts have been very busy as of late. They came up with a lot of upgrades here, a lot of these late to the party in my opinion as well. But Twitter is getting a nice pop. $34. This thing gets near 34. I think you got sellers. That's where you struggled there a couple times in November. Actually, for the majority of the end of November and early December. Eventually did take it out in mid-December before we had the collapse of everything. Double bottom perfectly at 26, way back from the October low to match it. And now you've come up, and you've gotten 2/3 of the losses back. So at a certain point in time, people are going to be like, oh, I was down this, I'm going to start bucking. So I think price is memory here. I think you start to run to sellers even at 33 and the 33 handle all the way up to 34, 35. There's lots of people who are down in this thing, probably looking to get their money back. So I'm more of a fan of sell the rip on this one too. I sound like a broken record selling the rip on all this stuff, but that's just the way the charts are lining up.
Do we care about Snap? They're getting an upgrade.
Yeah, it's getting an upgrade. Yes, it's up 9 cents here today. Yes, it's Cowen upgrading it. Yes, it's had a nice comeback from the lows as well. I don't know. The story here, some of these stocks I like the story in. And some of these stocks I think, I do believe longer term they're going to be okay. I still like the Twitter story. I don't like the valuation, but I like the Twitter story. I like the product. I don't even like the Snap story anymore. So, I mean, yeah, it's had a nice rally from like under $4 there 2 weeks ago, but I don't know. You get up near 7. I think you got sellers all over the place on this too. And I think when I look at this a year from now, I think it's lower. Interesting. I don't like the story, my opinion.
No. I don't like the story either. I had a story for a while. This is purely anecdotal, but just between myself and my friends, because we are of that that demographic.
Yeah.
I've stopped really using it. I might still have it, and I still use it more than I use, say, Facebook. But
the dancing hot dog was the top of Snap.
Yeah. Okay. Interesting that UAL, is getting an upgrade here this morning from JP Morgan. They were actually down though. They had we have guidance. Excuse me, I've got like I think it might like a thing in my throat here, but a UAL and AAL both down this morning on some guidance that came out. UAL's was after the bell. AAL was this morning, and they came out with some ASM's available seat mile numbers and total revenue per passenger, and some guidance for the fiscal year EPS. AAL's guidance for the fiscal year was light, and UAL's guidance was also light.
I'm surprised the market is only down 17 points today. There's a lot of bad news here, guys. Maybe it's going to shrug it off. Maybe we got the buy the dip mentality here holding it up here this morning. But I mean, AAL, look at some of these stocks, what they're trading down here. So AAL's down 7%. This is one that, clawed its way back in January, got back, about 30-40% of the losses from December, and boom, it's right back down to the lows. UAL, it's getting an upgrade this morning from JP Morgan. Maybe they're defending it after the fact, but the numbers are down, and the stock's trading down 2 points here. So it's going to trade down near the lows again, too. You got Spirit Air. It's held up better than the other ones. Save, I guess it's just been a better performer. I don't know. I just look at, Macy's down 18%, UAL down 7%. I'm trying to, there are some stocks that are trading higher here, a few stocks trading higher, but like we just went through Twitter and Boeing because they got some nice ratings, upgrades. But really, take the upgrades out of the equation here today. This is an ugly day. Ugly individual day for a lot of stocks. And here we're down 17 points and you say, oh, it's a significant sell-off. But think about where we were a week and a half ago. 17 points was a drop in the bucket. We've had such a rally here on the S&Ps, and now you get disappointing sales. You get now more disappointing numbers from, you know, a couple of the airline stocks. This earnings season isn't starting well.
No, it is not. One stock that is holding up this morning a little bit is Ford. They announced some potential plant closures in Europe. Also, should mention that the auto show is next. It starts Sunday. It runs for 2 weeks in Detroit. So expect some headlines next week about new models being released. Ford, GM, Fiat Chrysler, but Ford holding up here a little bit on that news. But like you mentioned, not a lot in the way of green here this morning.
No, but the markets aren't down that much, 0.6% down on the SPY, so it's not down there very much. So we're holding up a lot better considering some of the individual carnage.
So what does that kind of tell you then? Does that increase your faith?
I think you just got people here that are like, I think they're late to the party and they're looking to buy the dip and they think the bottom's in. And maybe that's the case, but with some of these moves here today, it makes my thesis feel a little more comfortable that I think we're going to retest those lows, or at least, have a little bit of a pullback here. I might be dead wrong. And maybe they're just going to buy everything else up to help the market out. But, when I see Macy's down, that's a big move down, 18% for Macy's. Maybe they're going to buy it right back. Maybe the buy the dip mentality is going to come in and Macy's is going to get back and go back to 27 or 28 bucks. It could happen. It ain't going back to 31.72, but I just see the rally. Everything is set up so well. It's almost, the one concern I have is it's set up so well. Like the technicals have been, this market has been trading so technical and it's set up so well that it's so obvious that, maybe it's going to do the opposite. Maybe it's just, I used to always say, if the picture is so perfect, it's probably going to go the other way. And that 2600, like to fail up here at the 50% retracement coinciding with the old resistance point, it's set up so well that makes me think that maybe it's not going to work, but who knows? I mean, it's a pretty picture for the shorts. Whether it's going to work or not, I don't know. But I even look at Visa, and we talked about it earlier there. Look at the rally we've had. So Visa's trading 150, 140, in October, November, and then, just has the significant sell from 145 all the way down to 121. We're right back up and we kiss almost to 140 again. You tell me the people who have bought it from October, November aren't excited to get their money back? I think they are. That's why I think you're going to start to run into trouble here. So if you're buying it here, what do you got? 3-4 points of upside? But if you're wrong and the market does decide to, start giving it back, the thing could be back at 125 on you or 120 on you. So I don't like the setup there either. MasterCard's the same story. I own MasterCard in my long-term portfolio, but it's coming back and kissing near 200 again. I'm almost tempted on the long-term side to dump it all. Now, I don't want to because I don't want to trigger that much capital gains for next year because, like I said, my cost basis on this is $16. But I dumped part of it last year because I was concerned. I just don't see the setup here that says I got to go out here and buy stocks right away. And obviously, as traders, we got to be able to flip our opinion fairly quickly. We start getting up over 2,600, 2,620, and then it starts looking like we got more buyers and stocks start to look a little bit better. That'll be a different story. But right now, I say this market is guilty until proven innocent.
What about the ones that, and I know we discussed this name a lot, but a name like Square yesterday that had another update. This is a textbook downtrend here, but
broke trend. That's one. I'd say you've kind of broken the downtrend here. So when you broke up above 60, that's the good news. The bad news is you got more resistance at 70, and the bad news is you have a lot of people underwater in this thing. I like the Square story. I would be a buyer of Square if it pulled back into the 50s, I think. We missed it the first time. It gave you one chance, maybe a 53 back in early January there, after the 1,000-point update. But, I like the story in Square, so it's a different story. Evaluation has always been a little bit scary, but I like the story here. And I think Square eventually could be a one that I look at, 2 years from now and it's back at all-time highs, or maybe a year from now back at all-time highs.
Whoa.
So I like the story. As opposed to like a Snap that I don't like the story, I'm more inclined to buy a Square pullback here, but I'm not chasing it. I'm not going to go up and buy it. $66 was 53 a week and a half ago. I think you get a shot back at 60. I think you're gonna, and I think maybe that's where you strike if you really want it.
I mean, I look at that chart. All I see is lower highs and lower lows. So I don't know how.
Oh yeah,
you can say that.
It depends how you draw your lines, right, Spencer?
How do you say that right there? It looks pretty
It kind of
straight.
looks like it's
Looks
if you drew
pretty
the
straight
line
to me.
perfectly, connecting the 100 to the 81
Looks pretty
to the
damn straight to
72
me.
top, and then you're down at like the 62 top. You kind of broke trend. So it depends how you draw your lines. Isn't technicals funny? You can have that, and you go, I'll just draw the line a little bit different, and then I'll get a different picture. So I mean, that's why technicals. We've been talking a lot of technicals on the show here today. It's one piece of the equation. I firmly believe that it's very difficult to make money in the long term just using technicals, and that's it. There's gonna be a lot of people that don't agree with that statement. That's just my own theories. I've been at Bright Trading for 20 years. With 400 other traders, we've only got about 180 here now. But I've seen a lot of traders come and go, and the traders that I've seen that it doesn't work out is the ones that are just using technicals, and that's it. At Bright, we're more stat arb. We're looking at relationships. We use charts, but it's not our first go-to thing. Like I said, I have 5 screens here. 1, 2, 3, 4, 5 screens I'm looking at. I have one chart on 5 screens. I have one chart, and it's the 90-day chart. That's it. That's all I have. I have one full and one screen, and then it's a one corner of one screen. So, I've got obviously news is on 2 computers. I have 2 screens of news, because when news happens, like Boeing gets upgraded last night, stock's going up. I don't care what the chart looks like. It got upgraded by Morgan Stanley. It's going up. So who cares? As a day trader, who cares what the chart looks like at this point in time? It's going up because Morgan upgraded it. News trumps all. So that's why I have 2 screens of news. I have 2 screens of just filters, scanners that are giving me, sudden moves in stock. So I can say, oh, what just happened there? Or what just happened here? I have Twitter up on 2 screens because sometimes, something will break on Twitter, or I see something, or I get an idea off of it. One screen of Twitter, I should say. And then I've got my trading platform, on 2 screens as well. And then I have a full screen dedicated to imbalances as well. So you can see how much, I put in technicals. So we talk technicals because, it's nice to talk technicals. A lot of people like talking it. But you got to be more than a one-trick pony. There's going to be some people. Todd Gordon is an excellent technical trader. Excellent. He does a good job. And by all means, if you've only used technicals your whole trading career and you are making money, continue to do it. But if you're just starting in this business and you say, okay, I'm just going to use technical, I'm buy a TA book, and that's what I'm going to use, you're missing a lot of other important information. It doesn't matter how good the Macy's chart looks. If it comes out and the same store sales suck, stock's going down. So you've got to be able to, now the technicals, you look at it from a different, but if Macy's would have killed it, but the stock would have been up. Fundamentals trump technicals every single day. Technicals, now you can look at it, you can analyze it after the fact, but news trumps all.
And that's one of the reasons why we like talking to Marc Chaikin, because he uses both. Like when he says he likes Salesforce or he likes Visa, it's a fundamental analysis first, a technical analysis second. I
firmly believe in that. Fundies first, for sure.
Right. It's fundies first, technical.
News. I mean, news is just so important. There's nothing more that, and it's such a news, in this environment where algos are news readers and stuff, news is everything. I mean, if you've got an earnings event coming up and you're in something for a technical trade and you're going to hold it through the earnings event, you're flipping a coin. It doesn't, matter what the chart looks like when the stock comes out with earnings. Apple comes out and, all of a sudden, warrants, it's going down. If you've got, a stock comes out and they blow it away and they have great earnings, it's going up. So, and it doesn't matter what the chart looks like in that case. Technicals work very well in the absence of news.
Right. All right. We're off our soapbox now. Let's run it back. There are some convenient ratings today. For example, Wells Fargo downgraded Estee Lauder and Elf overnight. Well, all retail's getting hit here. Yelp getting a downgrade from Morgan Stanley to underweight. This one, every time I look at it, it's lower. As I pull up a chart here, but Yelp. What else is getting downgraded here this morning? Lockheed Martin downgraded at Morgan Stanley as well. We have JetBlue. The airliners are all down. It's getting a downgrade from JP Morgan. Dollar Tree downgrade Oppenheimer. Big Lots downgraded Goldman Sachs. B&G Foods downgraded BMO Capital. A lot of retail and airliners are all down here, so there's a lot of convenience.
Yeah, and any retail stock that's getting downgraded today, it's going to be a double whammy. So they're downgraded. The sentiment's already bad because of the Macy's, Kohl's, L Brands, Target debacles here this morning. So if you got downgraded like .DLTR this morning, you're going to be hit harder than normal, just because retail's already was going to hit you, and now you're getting downgraded, and it's going to be a double whammy. So careful on any retailer buying a bottom on any retailer that's been downgraded. I mean, Nike got upgraded here today, and Nike is trading down 1%. That's how much they hate retail stocks here this morning. So typically, other things being equal, Nike would be up here. I got upgraded at Needham. It would be trading up in the absence of other news. But with every retailer, getting basically slaughtered here this morning, in the case of Macy's, it's knocking down every retailer. So I don't expect any retailers to be higher.
All right.
Bed Bath and Beyond, which had really good numbers. And
well,
that's coming back.
But even that, though, Joel loves to say, where we're leaking overnight here, and whether the high for the overnight session is in. And that looks clear as day to me also. I mean, it's been leaking all morning.
Yeah. Well, yeah, it's 15. Forget about it. It's going back to these things go when they get back 2/3 of the gains. They typically, and they sometimes get back at all. I don't know if it's going to give it all back. That would be a crazy move if it gave it all back, but it's not out of the realm of possibility here. So if you're chasing it last night there, you're getting a good lesson on not chasing stocks.
What about the healthcare stocks? We talked a little bit with Marc, but they all got hit yesterday. CVS, not all of them, but a lot of them. CVS,
yeah, they did.
AbbVie, Mylan, Bluebird, they all got hit.
Yeah, and maybe a speculation, that some of these like Bluebird Bio, I've been speculating that it could get bought, but I said, hey, I'm not chasing it up, on 20 points here either. Bluebird Bio gets back to 100, I'm interested. On a pullback here, I'm interested in a Bluebird Bio, but I'm not chasing again, and that's what you would be doing. AbbVie, I own that in my long-term portfolio. I've lightened up half of it. It's still got a nice dividend. It's still got a good story. It's still got a great drug there. But I'm just concerned that, again, this overall market is just not looking as healthy as, it's still looking healthy from the last week, but still overall, I think there's still an unhealthy big picture here. I think there's a lot of issues. And the retail sales today just makes me feel a little bit more bearish. And I know we've been really bearish on the show. This has been one of those shows where we've kind of come on and really talk, because there's a lot of negative news here today. But if you're putting your big long-term investor hat on, nobody really knows anything. I mean, yeah, you can kind of predict and you can use technicals and you can do a lot of things, but we can get a trade deal tonight. And the stock market could be right back up at the highs, and Trump, we know, is going to defend the markets. He already said he wants to get a deal done to help the market. The market starts to really go in a downturn here again. There's going to be a trade deal that's going to help it. Is that going to prop us up? Yes. Is it going to keep us up? I don't know. So you just got to analyze everything, with, a big picture, and we can, set up charts and we can look at this and we can look at that and we can try to give predictions and stuff, but there's no way to know anything. So always, that's why, if I'm kind of bearish right now, but hey, I'm still 60% invested in this overall market. If I was really knew that the market was going to go down, I'd go 100% cash and I'd go short, but I'm not that confident in it. I'm just saying that I want to be a little bit less invested here because of all of the unknowns out there. That's a long-term investing hat, but nobody knows anything.
Exactly. All right. With the show just about wrapped today, can you give us an update on the imbalances? Have they changed at all? I bet they're all on the sell side.
Bank America, that grew.
What was it?
230,000 now to sell in Bank America. That has grown. Citigroup has 36,000 to sell. They're mostly little sell imbalances there. AT&T and Verizon have small buy imbalances, but they're small. And that everything I see is so small that it's going to change in the last minute or two. So I don't really see anything jumping out at me and saying, "Whoa, this one looks crazy." So
all right. So we got some small imbalances that are going to flip either way, but the biggest ones are to the sell side.
They're going to go to the sell side. I mean, when you're down 17 handles, majority of stocks are going to open down. So there's going to be, and you try to look through the tea leaves and see, okay, is there a few stocks here that might actually buck the trend and trade higher here today? I mean, I look at gold is even down here today. I don't see what's jumping out of me. I see Boeing and Twitter. Boeing is up significantly. When I'm looking at like 200 stocks here on my ticker. And I can see Ford trading up 3 cents. I can see Boeing. I can see Pepsi trading up 96 cents, but that was a bad tick. That was just somebody on an a lot. I can actually look at it and bring it. It's offered down. So that's, you can scratch that one. I see Merck trading up 57 cents, same story. That's somebody just got excited with a retail order and bought it up, and that doesn't mean anything. But Boeing and Twitter are both trading higher. Twitter is up a buck, leaking a little bit here since we were talking just a little while ago at 33.30s. It's now 33.20. And Boeing, which is leaking a little bit here too, but 347. Lots of good news for Boeing here today. I mean, you had an upgrade from Morgan Stanley with a 450 price target. It's a huge PT. You had a positive rating coming out from Susquehanna. That helps it too. So there's lots of reasons for Boeing to be trading up here today, but I don't see much else trading higher.
Man, yesterday I feel like we were so bullish. We had the meetings. It supposedly went well with China. We had a Trump and congressional meeting. I'm talking about yesterday morning. I was feeling good yesterday morning, and now today everything has gone the other way. But that's the way it goes. That's the way it goes in this market. That's going to be it for our show. Thanks to our guest, Marc Chaikin. Thanks for all of you joining us in our chats, both on YouTube and premarket.benzinga.com. You can catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. Please remember all the information from our show is for informational purposes only and not meant to be investing advice. That's it for our show today. On tomorrow's show, the final one of the week, we'll be joined by Nate Tobick and Sean Emery. Looking forward to both those guests. But that's it for us today, folks. Have a good day, and we'll see you on Friday.